Micron just reported the single most extraordinary quarter in the company's 47-year history, and the stock is barely moving. And that actually tells you more about where we are in the AI memory cycle than the numbers themselves do. Let's get to the numbers. Q2 adjusted EPS was $12.20, a massive 31% beat. Revenue hit $23.86 billion, crushing estimates by nearly $4 billion and growing 196% year over year. In fact, Micron set simultaneous all-time records in revenue, gross margin, EPS, and free cash flow, a first in company history. The AI pricing dynamics feeding this are unlike anything the memory industry has ever seen. DRAM and NAND contract prices have surged over 90% since December. This is a structural repricing of the entire memory industry, driven by insatiable demand for AI infrastructure. And despite this growth, supply is structurally constrained through and beyond calendar 2026. To meet this demand, Micron announced HBM4 is now in high-volume production for NVIDIA's Vera Rubin GPU. It's the first HBM4 product in the industry, and the entire 2026 HBM supply is already sold out. Now for the guidance that should have sent the stock to the moon. Q3 revenue guidance, $33.5 billion, a staggering $9.2 billion beat versus Wall Street. And Q3 adjusted EPS guidance is $19.15, a 59% beat to consensus. That implies year-over-year Q3 revenue growth will exceed 260%. CEO Sanjay Mehrotra said it plainly. Micron set new records in Q2 and expects significant records again in Q3, stating that the best is yet to come. So why did the stock slip after hours? Because MU entered the session up 62% year to date, and the options market had already priced in a huge move. When a stock has already priced in perfection, and you deliver perfection, the path of least resistance is a pullback. But with analysts like Wedbush targeting $500, tonight's price could look like a gift. Q3 results in June will tell us if $33.5 billion becomes a floor or a ceiling. Like and subscribe to Stock Scoop Shorts for more earnings reports like this.